Thank you very much to GCFF for this virtual conference. It's my pleasure to present Solitario Zinc Corporation. I think we have a very interesting story in the zinc space. I'll be using a lot of forward-leaning statements today. What separates Solitario from a lot of other junior zinc companies is two major joint venture interests, one in Peru, the Florida Canyon. It's a high-grade zinc project. And the other is also a high-grade zinc project. It's a Lik Zinc Project in Alaska. We're well-financed with $7.9 million in cash and marketable securities. Management and directors own a lot of the stock, just under 10%. A very disciplined capital structure. We only have 58 million shares outstanding. And we've been in this business a long time. We have a track record, I believe, for creating value and moving assets through feasibility and permitting. The zinc market, we think, is setting up very nicely for a number of years. There's going to be a lot of stimulus spending in the world. The estimates are somewhere between $4 to $6 trillion in stimulus spending. Most of that is infrastructure build out, which equates to increased demand for steel. And when you need more steel, you need more zinc, because zinc is often used for almost all steel applications. It protects the steel. The main use is galvanization. The main user is China. They consume well over 50% of the world's zinc supply. And one of the things I also want to point out, we think there's there can be a new demand for zinc moving forward, and that's in battery storage. There's a lot of research going on. It's undergoing commercialization right now, and that's the zinc air batteries. And we think that could be a potential large new use for zinc in the future. We have two world-class partners in Florida Canyon in Peru. Nexa is our partner there. They have $1 billion market cap. They operate 3 underground mines in Peru, 2 mines in Brazil. They own 3 smelters. It's the 4th largest zinc producer in the world. At the Lik project, our partner there is Teck Resources. It's a very large $10 billion market capital company. They own the largest zinc mine in the world, and the most profitable. It's right next to our Lik Zinc Project, and they're our 50-50 partner. Nexa's our 61%, 39% to Solitario partner. It's very unusual for juniors to be joint ventured with major companies. It means you have to have a very good deposit. And we think these are 2 of the best deposits out there. Our current share price is around 75 cents US. Shares outstanding, 58 million shares, 5.7 million options, fully diluted 63 million. We have a 52-week high of 90 cents, and back at the depth of the COVID in March, we were at 13 cents. So we've made a lot of progress since then. We think we have a lot more room to grow in terms of our share price. We're very actively traded on the New York Stock Exchange. 700, I think now the figure is getting closer to 1 million shares a day are trading. So there's great liquidity in the stock. And again, cash and marketable securities, US $7.9 million. We have our burn rate under control. We spend about $1.3 million a year, excluding drilling. This year, we're anticipating a fair bit of drilling, so that number will go up. We're followed by Wainwright. The analyst there is Heiko Ile. And the top holders are management directors, own 5.6 million shares. Zebra Holdings, which is Lucas Lundin, a very savvy metals investor, owns 3.9 million shares, and Newmont Mining owns 2.7 million shares. One of the things we like to point out is we've brought our G&A costs down over the last 3 years substantially. We've gone from about $1.3 million in G&A costs to under $800,000. And we haven't had an equity raise in the preceding 9 years. So we've been very responsible on issuing new shares. If we look at consolidated zinc resources attributable to our joint venture interests, if we look at the measured and indicated, We have over just at 2.6 billion pounds of zinc to our joint venture interest, and that's in the measured and indicated category. In the inferred category, we have 1.6 billion pounds. So in total, there's over 4 billion pounds of measured, indicated, and inferred within the company's 2 core projects. I'll talk now to Florida Canyon. It's an advanced project. Over $70 million has been spent by our partners, 526 drill holes. We completed a PEA back in 2017. A 17,000 meter drilling program was completed in 2019, and that was the largest drilling program to date at Florida Canyon. The results of the drilling were excellent, very good grades. Mining widths were between 2 meters and up to 48 meters. Grades sometimes in excess of 40% zinc, which makes it some of the highest grades that you see reported out there. The Florida Canyon resource, the measured and indicated, just under 1 billion pounds at 890 million pounds, very high grade, 14.6% zinc. It's one of the highest grade deposits in the world. On the inferred category, we have nearly 2.5 billion pounds of zinc at greater than 12% zinc equivalent. Again, very, very large. Shown below is what's attributable to our joint venture 39% interest. The PEA showed that this project had robust economics, about $200 million NPV at an 8% discount rate after tax, and the operating margin was nearly $1 billion with a 24.7% internal rate of return. Payback was 2.6 years. So this showed really outstanding economics back when this was done. Now, since then, we've made a lot of progress on adding resources to the project. We hope, one of the more important things I want to say today is that we anticipate making a news release in mid-February, not far away, on the new resource estimate that incorporates the 2018-2019 drilling results. We had previously announced that we expected this release to come out in February sometime, and it looks like it's going to be in mid-May. Now, the other thing I want to stress about Florida Canyon is, as opposed to almost any other base metal project that a junior has, we're completely carried by our partner. Our partner spends all the money, 100%, on the drilling, the pre-feasibility, community relations, metallurgy, everything. We're carried to production on this. You won't see another deal like this in the industry. And Solitario will not have to pay back any of these costs through feasibility. Now, after a feasibility study is completed, Nexa will fund our 30% participating interest through a loan to Solitario. So there's no equity dilution for Solitario in this project, and we'll pay Nexa back the construction costs through 50% of the net proceeds or cash flow that are due us. So we will achieve cash flow right from the very early part of the production profile of this project. So we have no capital risk on the build out and no equity dilution. It's a phenomenal deal that you won't see with any other company. And that's because this project is so high grade, we were able to sign a very strong joint venture for Solitario's shareholders. Now, Florida Canyon, upside consideration, a new resource estimate will come out within the next couple weeks. We know that this deposit will grow significantly. We're open in virtually all directions, and we have a number of totally untested targets that we think are very strong targets. We also think when we do additional metallurgical testing that we'll be able to demonstrate much higher recoveries. We're pretty sure we'll go from 80% to around 90% in recoveries. And also the concentrate grade will increase from 50% to 58%. Both of these metallurgical attributes will significantly lower our cost on a per pound basis. One of the other things we're looking at is improved access to the project from the south, and a successful exploration drilling program, which our partner is currently permitting now. That would open up the south corridor to access. I'll go now to the Lik Zinc Project in Alaska. The Lik deposit, shown here in the crosshairs here, and the property shown in yellow, is only 14 miles or about 20 kilometers from the Red Dog mine. It's very close. The Red Dog mine is by far the largest zinc mine in the world. It's the lowest cost zinc mine in the world. And our partner, Teck, owns 100% of the Red Dog mine. Now at Lik, we're 50-50 joint venture partners with Teck. The Lik deposit has had significant work done on it, probably in the neighborhood of around $40 million. It's a large tonnage, it's high grade, and what makes this especially favorable is it's open pittable. It has good metallurgy, just like Florida Canyon does, and the region is very supportive to mining. We hope to announce a 2021 exploration program sometime within the next 5 to 6 weeks. We have the program, our partner, Teck, has proposed a program. We're still working on the details. It hasn't been approved yet, but we're expecting approval, like I said, in the next 4, 5, 6 weeks. When we look at the Lik project, a lot of tonnage there and a lot of pounds of zinc. In the indicated category, it has 4.5 billion pounds of zinc. That's in the and that's on a 100% basis. We own half of that 4.5 billion pounds. In the inferred category, there's 1.37 billion pounds of zinc, and again, we own 50% of that. So this is a view of the Red Dog, or I should say the Lik deposit here in the foreground. That's a geologist standing right on the Lik deposit. The Red Dog mine is 14 miles away. You can see it actually on the horizon there. And it's in the northern part of Alaska. The good thing is we're only 14 miles away from fabulous infrastructure with a large mill and a transportation corridor from the mine to the port facilities. Red Dog ships out their concentrate during the summer. It goes to smelters all over the world. The primary country that these concentrates go to is China. When a PEA was also completed at the Lik deposit, it showed excellent economics. At $1.20 zinc, it had a rate of return of after tax of 25%. Payback is less than 3 years. And the NPV on a 100% basis, after tax, 8% discount rate, is just under $300 million. So these two projects combined on a 100% basis have about $500 million in NPV at $1.20 zinc. These are some typical mineralized intercepts at Lik, historical. And what we're looking at in 2021 is the first drilling program in the last 7 years. We're planning about 1,000 meters of drilling, 5 to 7 drill holes scattered along the margins of this deposit. We have some excellent extension to targets that we think have a high probability of hitting. And one of the targets that's called stacked ore bodies, we think we have the potential there to have several layers of zinc mineralization. So this would be, I think, a very exciting drilling program for us. I do have to put the caveat in that this project may be impacted by COVID. It was impacted last year. We weren't able to drill because of COVID last year. Right now, it looks like the COVID situation is improving. We think we're going to be able to execute it, but it is COVID dependent, and hopefully by midsummer, which is about when the drilling program will start, COVID will be substantially improved. Okay, let's look at some of the joint venture considerations. Teck is the third largest zinc producer in the world. It operates the largest and most profitable zinc mine at Red Dog. And one of the things, Red Dog, it is subject to a 35% net profits royalty to the Nana Native Corporation. So 35% of Teck's profits go to this Native Corporation. Every 5 years, it increases 5%. And by 2032, half the profits will be going to the Native Corporation. So that means Lik, I have to say, is not subject to the Native Corporation royalty. So this becomes more attractive to Teck to develop in the future. Our joint venture relationship with Teck is outstanding. They run very, very strong programs. And during the last 3 years, I can say Teck has become more engaged and enthusiastic about the potential of this project. Okay, what are the Lik upside considerations? We think the Lik deposit has the open pitable part has the potential to increase in size by several million tons. We're quite sure that it has the potential to add mineralization underground with underground mining methods. And the project economics will be significantly enhanced if we utilize the Red Dog infrastructure. Much lower capital cost and modestly higher operating costs, but it'll translate into higher NPV and a higher rate of return. So in summary, I want to emphasize two major deposits, Florida Canyon, Lik, two great partners, Nexa and Teck, well-financed, disciplined capital structure, and be free to answer any questions now.
No problem, Chris. So let's get James' question and Ken's similar. They're asking about the zinc prices. You saw last year went up the zinc prices. Is it mostly because the zinc supplies closed down? What do you think of the zinc prices this year or later? What's your thoughts on that?
Yeah, the zinc price right now, I think the zinc market right now is in equilibrium pretty much. Demand is matching production. But with the infrastructure spending, I think we have a really strong impetus for zinc price to increase because there's very little room for increasing zinc production in the near term.
Thank you. So to take one last question, I think this is important to address from the Chinese side here. I think he's asking how will you be able to not waste much capital for years and be able to advance the projects?
Yeah, good question, and thank you very much. We're a company that really not only are geologists and exploration people, but business people. In the past, as we've developed projects, we've sold them. Back in 2006, we sold a gold deposit to Kinross Gold for $220 million. In 2015, we sold a gold deposit to Waterton Capital for $30 million. Now, not all that went to the company. Most of it went to our shareholders. So we made our shareholders a lot of money there, but it also did put money into the treasury of the company. So we've never had a reverse split. We've been around for 25 years. And for a company to only have 58 million shares, it shows we've constructed good joint venture deals and good transactions.
Thank you, Chris, for sharing your story with us today.
Thank you very much, Gilbert. Pleasure and thank you everyone for listening.
Thank you.